can promise you that this evening and these upcoming 2 hours, you are going to learn a lot. In Saudi Arabia, especially, and other than Saudi Arabia, also all over the world, uh, the companies are aiming to going to the IPOs from private to company to register themselves as IPO. The challenge for CFO is that they don't know what are the process of these IPOs, and this was most demanding topic, especially our ICMA members were doing. Uh, Luckily, we have our fellow member, Mr. Hamadur Rahman, who is an expert in IPO readiness and have done this task so many times. Mr. Hamadur Rahman is a fellow member of ICMAP, and he's also a fellow member of ACCA, and he has done MBA from Harvard University. He is working currently as with Riva as a vice president finance, and he has served as CFO for last many years as well. He's also expert in IFRS, and he I can say he's a guru of fintech industry. I'm very thankful to him that on my invitation he accepted to deliver us the knowledgeable lecture, and to inshallah we are going to have a good knowledge today by the end of this session. Without wasting of your time, I hand over the stage to Mr. Hamadur Rahman. Over to you, Hamad.
Thank you. Assalamu alaikum. Bismillah ar-Rahman ar-Rahim. So, Wasim, can I share my screen?
Yes, please, you can.
Yes, sure, sir.
Okay.
Ahmad sir, if you allow me only few seconds.
Yeah, sure.
Uh, Dear attendees, please, I request you all that don't mention your registration number or membership number in the Q&A session. Your attendance will be marked automatically by the head office. So only use this section to ask the questions. Please. Thank you very much. Ahmad sir, please proceed.
Thank you very much. So, is my screen visible?
No, you are visible, but are you talking about the slide? Have you shared
Yes.
some slide?
Yeah, I have shared my slide here.
No,
Okay,
I
I will
cannot
share
see.
again. I will share again.
Yes, now it is there.
But can you make it like extendable? Maybe, yeah, it's perfect now. You can carry on now.
Okay, great. Okay. Thank you very much. First of all, thank you very much, ICMAP KSA Branch Council, Mr. Wasim, member of KSA Branch Council, Mr. Muhammad Hashim, the Secretary of the KSA Branch Council of ICMAP, and Mr. Siraj, the Chairman of the KSA Branch Council, for organizing this webinar on a very important topic. A little correction in my introduction. So Wasim had mentioned that I have done my MBA from Harvard. So it is actually from University of Manchester, UK. But from Harvard, I have done different executive courses, including one in the business strategy. So without wasting more time, I'm sure that there are a lot of members who are more senior to me attending here. So I will call it a knowledge sharing session. I don't expect that I'm in a position to teach you guys. Mashallah, a lot of you are much more senior, and it's a learning full experience for me whenever I am interacting with our members. So welcome all of you, anyone who is joining me. I have got a lot of interest from a lot of people from different countries, people from Ireland, from UAE, from Egypt. A lot of people have reached out to me. Some of them are my ex-colleagues or current colleagues from ACCA members, ICMAP members, ICAP members, and from my university fellows. So anyone who has joined today, so most welcome. Today's topic, which is about the CFO role in the IPO. has got a lot of interest from many members, because many members, especially in the KSA context, because in KSA we have seen a lot of investment activities are going on, and there is a consistent efforts from the government of the KSA to diversify the economy and bring a lot of private sector investment and foreign direct investment into the country, and try to diversify the economy from its dependency on the oil sector. So today's presentation is covering this very important thing, which is a lot of companies are trying to achieve listing of their shares into the stock market here. So today's presentation will cover specifically like what is the strategic context, why it is important here in Saudi Arabia, the role of CMA market, CMA, the Capital Market Authority. Then what is the objective and IPO when companies are considering, why they are actually considering for that. What is the CFO role throughout this journey, how he will help during the IPO readiness assessment. Then what are the usually gaps which have been observed during this entire process, and how the CFO can fix it, what should be the action plan to close those gaps. And after listing is done, so what is the post IPO scenario, and what are the challenges that a CFO face. So this is overall a very comprehensive topic, and actually we can have a full course, a semester course on this, if we go into detail of everything. So 2 hours time is not much for that, but we will try to cover it as much as possible. So going to the some introduction and strategy concept, as I have mentioned earlier, that the companies actually they are getting a lot of support from the government. So KSA government have encouraged private sector companies to go for the listing, and one of the primary reason is that it is actually supporting the Vision 2030. You guys might have already aware of it. So those who are outside the KSA, and if they are not aware of it, so Vision 2030 is a vision of the Saudi government, which was created by His Highness the Crown Prince of Saudi Arabia, and it is actually depending on a lot of transformation throughout, not only in the economic sector but overall culturally. And we have seen since 2015 the KSA has been transforming. One of the thing in the Vision 2030 that they want to attract a lot of foreign direct investment and want to diversify the economy, which is usually like traditionally the Saudi economy was dependent on producing oil and selling it. So you might have seen, like, we are in Saudi Arabia now. For a lot of our members who are in Saudi Arabia, they might have seen already a lot of investment is going on. There are a lot of new projects which you can see, and you might have heard about the Soccer World Cup. There is a World Expo which is going to come. There is Riyadh season. There is a lot of activities are going around. When a private company is actually going for a listing, it is opening a door for the foreign direct investor as well as the private sector investors to invest into a company when it is actually going for an IPO. And during that this presentation, we'll see why it is happening like this. Okay. So the IPO actually allows the Vision 2030 alignment, because Vision 2030 aims to diversify the Saudi economy and reduce reliance on hydrocarbon, and it is actually very much needed for the growth of the overall economy, because FDI is one of the a key indicator for any economy. When there is high foreign direct investment, it is generally considered a good sign for any economy when investors are actually interested in investing into the economy. So the role of IPO in Vision 2030 is very much aligned with this objective, because actually listing existing businesses into the stock market expand the investment opportunities. Because if your company is not, like private sector entities, if they are not listed, market. They are operating on its own. Okay, so the size of the capital market remains very small. There are only very limited companies listed on the stock market. So if there are more companies and the investor can see the potential companies they are listed, so it's very easy to buy their share and invest into the economy. If compared to that, if a company is not listed, so it is very hard to find those companies because they are not visible. They might be very great companies, but if they are not listed, so they are away, like they are not in the eyes of the investor. And also it is very difficult to ascertain the fair market value of the shares, for example, because it's not a listed company, and it's not easy to invest into such companies. So IPO actually channelize a domestic and foreign investment by listing the shares on the stock market. Then if you look at some of the regulatory roles, so I have just put a snapshot from the CMA strategy. It is a capital market authority is the regulator here in Saudi Arabia, who is the regulator of the stock market as well. So I have taken it as a snapshot from their website, and I have also shared these all resources in one of the last slides for resources. So you guys also can download this presentation when the institute will share it with you, and you can also visit those resources, and you should read it direct from the resources. So you can see there the CMA strategy key focus areas include the market transparency and investor protection. So this is like one of the major objectives which can be achieved through the IPO, because when actually a company is going to apply for a listing of its share to the stock market, so it has to actually go through a lot of very complicated process which we are going to see. Okay, about governance, about how the board is doing, about the internal audit independence. Okay, so these are all things when these are ensured, so actually it gives a transparency to the investor, and investor can trust and rely on the published information of the about the company financials, for example, compared to a listed company. If a company which is not listed, so you are always like you can always doubt about those numbers because you are not aware if the company has a lot of governance issues. It is not regulated by anyone. Okay, so a company which is regulated by the CMA, and they have to answer the Saudi exchange, for example, queries. Also, it has to announce its information publicly. So the type of information which it will provide, it will be more transparent, and auditors are also looking at those information very carefully, because they once a company become listed, so the auditor risk increases, because in case of auditor will approve or give a clear report to any company which actually has some problem, so this will actually create a challenge for the auditors, like quality of work. So that's why auditors are always looking very keenly on those companies which are listed. So the level of transparency is different. You cannot compare an unlisted company financial information quality wise with a listed company financials. The third focus area for the CMA is enhancing market depth and liquidity. As I mentioned, if you have a stock market which with only few companies and limited capital, okay, compared to a stock market which is very big, like for example London Stock Exchange, Nasdaq, okay, so S&P 500. So all these stock markets are big stock markets where global investors they invest. Okay, so one of the objective of the Saudi government or the CMA is to make the stock market at world class level, so that foreign investors can be attracted. Then the CMA support listing on a main market, and there is a parallel market which is called NOMO. Okay, so NOMO is a like kind of specialized environment where not every company is tradable. So there are only few players. So there is a like limited liquidity available. So it is called parallel market. The example of parallel market is in various countries, including our neighbor UAE. Okay, so it is not the main market, so not every retail investor can trade in that, but only limited investors can trade into that. We will discuss more about what is the difference between main market and NOMO later on. So you can see that the CMA strategic direction is that professional Saudi capital market as a major financial hub, position the Saudi capital market, okay, and enhance financial confidence and transparency, and align Saudi market with global best practices. Now, when it comes to the main market versus no, like the strategic objective comparison, okay, so once a company is going for the like IPO, so it is usually have different. It could have different type of objectives. For example, it is looking for a growth capital. So if it has a lot of projects that requires a lot of funding, okay, so it can decide either to go for main market or NOMO. Okay, so what is the difference between main and NOMO market? So the NOMO market is like have requirements almost similar to main market, but have the slightly less requirements than the main market. So some companies they opt to go first to get their shares listed in NOMO, and then later on they go to the main market. So in that way they are safeguarding themselves, like preparing for a like intermediate position first, then go for the main market. So NOMO will already give you the whole experience what you can expect when you are listing in the main market. So in main market usually large capital can be raised, access to institutional, regional, international investors is there. While in the growth capital for SMEs, like if you are not a very big company, only at SME level, you can still go for NOMO. And you can have a like first step to go to the market, main market. Then if you look at the liquidity and shareholder exit, so this is one of the another objective which the current founders of a company which is going for like is aspiring to go for public, they want to take an exit. So they created a company, the founders created a company, and now the company is profitable. Now they want to take an exit and they want some other shareholders to buy their shares. Okay, so this could be one of their objectives to go for to the public. So actually in the main market there is like deeper and continuous liquidity available, and in NOMO it's only controlled liquidity is available. So as I mentioned that in NOMO not everyone is eligible to work or to trade. They have to, if they want to trade there, they have to meet certain requirements. For example, uh, they must have traded for certain amount during the last 12 months. That could be, I think currently it is around 5 million. Or otherwise they might have 3 years experience in the financial sector. So if someone has worked in bank or brokerage companies, he can be eligible. Or otherwise they should have a qualification. So here its acceptable qualification is CME 1, which is the capital market qualification. So this is a like acceptable qualification. If you have, you can prove that you have this certification, so then only you can trade into NOMO. So that's why NOMO has a very like a lot of restriction on, they don't allow any everybody to trade, unlike the main market. So that's why in the main market there is like high liquidity compared to NOMO. Okay. Then if you would go for the valuation and strategic flexibility, so you can see, just 1 minute. Okay. So in the main market, the higher valuation, visibility, and analyst coverage is available because everyone, all the brokerage companies are there, all the analysts are there. While in NOMO, the valuation is usually at the institutional level because not everyone is there, and the readiness of the company to go to the main market is also not 100%. So on the governance and institutional readiness, again, NOMO have like proportionate governance framework and learning curve, while main market require full public market governance standards. We will cover these, like what are the post IPO challenges for CFO. So it will be covered in much detail that what is expected from the CFO for the full public market disclosure requirement. Then if you look at the long-term capital market access, so this is another objective which the companies have when they are going for the public, because they can anytime issue new shares. They can go for the commercial paper issuance, kind of like any loan document they can start. So there is a lot of options available when you are into the market, which are not available when you are not listed. So here are like some compulsory requirement comparison between the main market and the parallel market. Okay, so in the main market, the minimum market capitalization of the company should be 300 million Saudi riyal. So this is if they are talking about the market value of the company, then for the Nomo it's 10 million. I got this information from a document which is already available on the Saudi exchange, and I have provided the resources in the presentation at the end of the presentation, so you guys also can go, and there is a lot of information available, educational material available, so please get benefited from that material. Then a percentage offered in the main market should be at least 30%, like whatever is your company capitalization. If it is let's say 300 million capitalization, so you must offer at least 30% of that shareholding to the general public, which means the existing owners of the company, they have to accept that they are going to dilute their shareholding or ownership by 30% and offer it to the general public so they can buy the shares of the company. Then in the Nomo, it is at least 20% or floating Saudi Riyal 30 million worth of shares in the market, whichever is less. So from these two items, anything whichever is less, either 20% or 30 million worth of shares, they have to float for the public. For the public shareholders, at least there should be 200 shares in main market. In the parallel market, it is 50, but I think this information is now old because recently there is a change in the law. So they have not updated their document there. So I believe now they have even changed it to 200. But anyway, this can be confirmed from the market. But currently, based on the information available on the Saudi exchange website, it is currently written as 50 there. Okay. So then in the direct listing, it is not allowed in the main market. In parallel market, it is allowed. So what is direct listing? So in direct listing, let's say, for example, what happened recently in Saudi Azam case when I was there as a CFO. So we went for a direct listing where we provided the market with 200 shareholders. So we didn't have to issue the prospectus and float the shares in public. Okay, so we skipped a lot of requirement because we provided the market that this is the list of 200 shareholders who are interested to buy these shares from us at this price. So if you have the minimum like 200 shares already, so in the parallel market you can go for a direct listing IPO instead of a IPO through a prospectus where the general public is purchasing your shares. Then in the main market, there are like continuous obligation of standard disclosure requirements compared to the Nomo, where the requirements are little bit lighter. Okay, in the main market, there is a quarterly financial statements disclosed within 30 calendar days, and year-end financials should be disclosed within 3 months. So these requirements are more or less same, but you can say in general the parallel market requirements are a little bit less than what are the requirements for the main market. Then there is a daily fluctuation limit for the share price. So it is usually plus minus 10% in case of the main market and 30% for the new market. But in the main market, only on the first 3 days, the 30% limit applies. So which means like once your share is traded, start trading in the main market, then during the first 3 days, it can appreciate up to 30% maximum. Okay, and after 3 days, the maximum value that can be changed in a share price is 10% in the main market, but this limit is in the Nomo is 30%. Those guys who have some experience in the stock market trading, so they must be aware of it. Then the due diligence, so there is like financial and legal due diligence and commercial due diligence. So some of it is like in main market, this is all mandatory, and in case of the Nomo or parallel market, there are some mandatory and some optional requirements. So financial and legal due diligence is mandatory, but commercial due diligence is optional market due diligence is optional. Underwriter also in the main market it is required, but in the in the NOMO it's not required. You want to try to list your shares without having an underwriter, so it is allowed in the parallel market. So these are like some of the procedural or main very basic requirement differences between the main market and the parallel market. So, some of the colleagues they had asked to talk about different stages of funding, especially in case of startup. So, I have been working with startups, so I will be referring to a lot of examples from the startup, but a lot of them are uh, sometimes applicable to other companies, even if they are not a startup, but they are looking for an IPO. So, usually a startup funding journey has different stages, which start from pre-seed, seed to series A, B, C, and IPO, and it could be series A, B, C, D. This is like not hard and fast rule that every company has to go through these stages. So in case of Saudi Azam company where I was a CFO before, they went direct to the IPO. So there was no pre-seed, seed, series A. So pre-seed is usually like done by the owners themselves. So you can say yes, there is always a pre-seed. So it's the capital which the owners invest when they are starting their business, and when they are like having a minimum viable product and early traction. If it requires seed capital from outside, they can always go to the venture capitalists or private equity companies to support them with the seed capital. And then again, there are different stages where they are going for a product market fit, or they want to scale their revenue, or they want to get the market leadership. So they can have series A, B, C, D based on their requirements. So it could be series A and then IPO. It could be series A, B, and then a pre-IPO round and then IPO. So it could be, it depends on any company requirement. If it is ready for the IPO and its management wants to go for an IPO from the start, so it can skip a lot of these stages. So some more light on the objectives of an IPO, why the companies go for that. So as we have already discussed during the comparison between NUMO and the main market. So primary objective usually that the companies they have, that they want to raise more capital for expansion and growth. If, for example, they have more projects that need a lot of financing, they want to strengthen their balance sheet and capital structure, and reduce leverage and improve liquidity. So sometimes they are using the proceeds from the IPO to pay off their debts, for example. So that actually reduces their leverage, and also it improves their liquidity. So it makes the company balance sheet more attractive. As far as the strategic objectives are concerned, so it provide an opportunity to exit fully or partially to the founders or the current owners of the company. Okay, and then it increase the corporate visibility and credibility. Of course, if you are not listed, so you are not visible and you are not as credible as if you are a listed entity. Then a lot of institutional investors, they are ready to invest if you are a listed entity. But if you are only a private entity, so only you have limited options, limited investors available. And of course, then they know that you are in a limited market, so of course the cost of such capital is much higher. uh, then also it enables acquisitions and strategic partnerships also. Once your share are listed, it is easy to do the merger and acquisition. You can get acquired, or you can acquire other companies easily if you are into the market, because the fair valuation is very easy to get, and everything is ruled by the regulator. So you have to just follow the rules to execute any transaction. So there are governance and sustainability objectives as well. So there is a, of course, governance structure has to be there. A board of directors, committees, risk committees, audit committees, remuneration committees, internal audit, independent function. So all these institutionalized governance framework provide you like a much clear picture about the company, and give confidence to the investors to invest into the company. Once you are actually institutionalizing all these governance structure, you are essentially reducing the risk in the operations of the company. And this is actually, if you ask me, what is the role of the CFO in this whole journey? So, in one sentence, I can tell you that this is the main crux of a CFO, to reduce the risk in the operations. When you are actually reducing the operations, so if you remember your financial management course from your CMA or ACCA course, so once the risk is reduced, you are using a smaller discount rate to calculate the present value of your future cash flows. So when you are reducing that discount rate, so actually your present value gets larger, which is essentially increasing the valuation of the company. So the role of the CFO is very significant in that, which is most of the time is not very visible, but it has to be communicated to the management and the investors very clearly. So we are now going to have an IPO journey throughout from the beginning till the end, and CFO responsibilities are at the every stage. So at the pre-IPO phase, then during the IPO execution phase, and then post-IPO phase. So just to go through very quickly on that. So in the during like pre-IPO phase, the CFO will have to assess the IPO readiness and identify if there are any gaps. Okay, and then ensure that there are like IFRS compliant historical financial statements, because this is one of the mandatory requirements. You cannot go to the market unless you are fully IFRS compliant. Then you have to strengthen the financial reporting processes and timelines, as we have seen that there are like timelines. So you have to have quarterly financial reporting done reviewed by the external auditors within 30 days and submitted to the regulators. So once you are not listed, so maybe you are not ready for that. So you have to make sure that you have speedy processes so that you can submit all these financial records on timely basis. Then you have to comply with the ZCA requirement and legal structuring. Support the financial advisor selection, auditors, bank and legal counsel selection. We will go in more detail during the process in the coming slides. And lead internal preparedness across finance and governance. So this is the role of the CFO during the pre-IPO phase. Then during the IPO execution phase, it has to manage the due diligence process, which is a mandatory requirement from the market. Then there is a valuation that has to be done by the financial advisor, and CFO should be able to do their own valuation and forecast, and it has to work very closely with the financial advisor during the valuation process, because once the valuation is done, then you can only determine what will be the share price that will be listed on the stock exchange. So for example, in my if I share with you my experience in my previous company, where we were doing the valuation. So the company hired a financial advisor externally also, and they did their own valuation, but I had done my valuation from my own, based on whatever we have done for the equity and debt valuation during our financial management course. And there is a lot of like standard practices for the valuation. So the difference between my valuation that I had calculated for the company and the valuation which was done by an external advisor was only 1 million, which is actually a very minimum difference. Because this valuation is always very subjective, you have to identify the risk, you have to apply different methods like discounted cash flow method, earning multiple, revenue multiples. You have to use different methods to calculate the valuation, and use a lot of assumptions, do a lot of projections, financial projections. So then you reach to a valuation. So CFO has to do its own valuation, so it can like reasonably question whatever the financial advisor is doing, and support him during the valuation process. Then it has to, of course, coordinate with the auditors and the investment banker during that process. Oversee the prospectus of the and the financial disclosure. So prospectus is a document which is a requirement from the market. If you are going for a public IPO, so you have to issue prospectus in which you will list all the information about the company management, about its business model, how it will create revenue, how it will create value, its past financial information, what is the management experience. So all this information is there, and the company future plan as well. So we will also go through the prospectus different sections that what is the information required in the prospectus, but this is mainly like a responsibility of the CFO to make sure that these financial disclosures are correct. Then it has to engage with the regulators and respond to their queries, because this entire IPO process, you receive a lot of queries from the CMA, from the Saudi exchange, stock market, that you have to answer. So it's not like something very easy that you just submitted your application and you get the approval. So there is a lot of rounds of questions that they are sending you, and then you have to reply to that. And of course, then you have to support the management presentations and investor roadshows. We will discuss this in more detail in the next slides. So the first thing that the CFO should be doing is the IPO readiness process. So before we go into that process, just a quick look about the roadmap of the IPO process. So you have so there are, like, you can see the blue and the or the black and the green stages. So the green stages are option stages, but the black are the compulsory stages that every company who is going for an IPO has to go through. So in the preparation phase, you have the application preparation, then IPO file submission. Then you receive the conditional approval from the Saudi exchange. Then the CMA approve it, and then finally there are like analyst presentation and roadshows. For investor education, the final price is decided, and then the book building and subscription process starts, and then the shares are allocated for the training. So this is a very like quick go through of the overall IPO process. We'll go in more detail about each of these steps in the slides which are coming. Okay, so here now you can see on my screen, these are the questions. Okay, so there are like when you have to decide about whether your company is ready for the IPO or not. So you have to answer these questions. Okay, and I have put here like some columns from my own, like ready, not ready, and gaps. Okay, so you can even take these slides and you can use these slides to have your own plan if you are going for an IPO. Okay, so it's the IPO readiness you are assessing for your company. You have to answer all these questions. So if you are ready or not ready, so you need to write here what are the gaps on which you have to work upon. Then maybe you can put the under whose ownership, who is the department or the head of the function who is will be responsible for that, and what is the target timeline. So you can create a action plan out of these questions. So these are total 50 questions. This is given on the Saudi exchange website also. Okay, and they had done it through the coordination of EY. So they have put this information on their website, and I have provided into the resources. You can go to that resource and take it from the primary resource as well. So these are the questions that you need to answer. That we will go through some of these questions, and you will see that a lot of these questions has to be done by the finance, or even if it is not done by the finance, so finance has some role into it. Okay, so for example, if you have developed a formal comprehensive written listing plan and timeline, you have your IPO strategy or not, written or not. Okay, so you are going for an like growth capital, or you are looking for an exit. uh, so do you have a plan for how you would use your listing proceeds? So this needs to be answered by finance. If you have not answered it, you need to do it now. Is there a formally documented business plan? So in the business plan also, again, finance can provide a lot of input in the especially for the financial projection, but it has to work along with the operations and the business, also the marketing and the sales team, that what are their plans, the product team, what features they are currently working upon, how they think that it will generate value to the entity. Then this plan has to be like have forecast model. So there should be a financial plan also, which is based on the business plan, supporting the balance sheet and cash flow projections and the income statement. This will be a fundamental document to which will be like, you can say, a founding stone for your company valuation. Have you formally assessed the marketplace and market drivers through independent third-party reports? So again, this information is not all 100% compulsory. Okay, but this is these are the questions which are given by the Saudi exchange on their website in these 50 questions. So which means they want to see that you have worked upon it, or you have the answer to these questions. Okay, it's not necessary that if some of it you don't have it, so you cannot be successful. as an IPO applicant. You can still get the your IPO application approved. But of course, the more you will be doing out of these questions, the high will be the likelihood that your application will be approved. Does the organization have a track record of profits and growth? Okay, it's very necessary that your company is in profit. Usually, if the company is still incurring losses, so the regulator does not like to give approval to such company, because it is afraid that once you are listed, so the general public will lose its money if they are investing into your share. Especially the startup companies, those guys who do not have a background from the startup, so startup companies can be incurring losses, but they can still have a lot of value based on their plans, based on their product growth potential. Okay, so that's why this question is there. Do you know which group company you plan to list? So very simple to answer. If you have several companies in your group, so which company you are planning to structure? Does the group have a transparent and clear structure? If it is not, you have to produce it, of course. Like who owns the company, who are your related parties, which is the holding company, the subsidiary company, what is the shareholding? All this has to be transparent and a clear structure. Have there been any acquisition disposal previously? Have there been any material changes to the group structure in the past few years, or any plans to in the short term? So these are the questions, and these questions are divided into like you can say finance strategy. Now this is tax and zakat strategy. Then there are system, about the system. So you can see for the tax and zakat, you have to answer these questions, and all of them have to be answered by the financer. Do you have a dedicated tax zakat function? Yes or not? Okay. Do you have a tax zakat strategy? Are you up to date with all zakat filing and documentation? Do you have any documented key tax processes, controls, policies, and tax tools in place? So these all questions need to be answered. If you have all these things available, it reflects that you are very much prepared for the IPO, and it is likely that your application will get approved. Now this is about the financial strategy. So these questions are also like all of them are related to finance. So you have to answer that: do you produce comprehensive consolidated management accounting information and compare it actual with the budget and do a variance analysis? If you are doing it or not doing it. If you are not doing it, then you must have to implement it before you go for an IPO. If you are a group company, so do you prepare the consolidated financial statement under full IFRS? Okay, so these are like the questions that you are going to answer. So if you are going for an IPO, you need to make sure that you have all these available. Is the financial data needed during the year being provided in time to meet publication dates? As we mentioned that you have to, after the IPO, you have to provide the reviewed financial statements reviewed by the external auditors within 30 days and submitted to the regulators. Okay, so do you have all these processes in place that you can prepare these financials within timely basis or not? Do you report on non-financial information on a regular basis? For example, health, safety, and environment, or official KPIs. Do you have sufficient capital markets reporting experience or not? A lot of companies who are not publicly traded companies, so they lack the capital market experience. Not everyone is dealing with the capital market, so they don't have this experience. So you have to acquire this experience before that. Do you monitor and ensure related party transactions? This is a very sensitive area, and the regulator is looking at it with very watchful eyes. Okay, so if you have related party transactions, which are the transactions between related entities where there is a common control exists. Okay, so the market is very thoroughly looking at it, and you will be asked very tough questions about it, that why these related party transactions are happening, what is the ratio of related party transactions, like for example revenue generated through related party compared to revenue generated from other customers. Okay, so if you have they usually like, they don't like to see a lot of related party transactions, because usually any uh, uh, kind of like fraud or unfavorable like discount, for example, if, giving favor to to some related party. These type of transactions are usually happening through the related party. So the regulator is very like keen about the related party transactions. It's not something like it's forbidden, but try to avoid it as much as possible. Like whenever I am the CFO, I try not to show anything on my balance sheet as related party balances, or at least to minimize it as much as possible. And if it is like not avoidable that you must have to do some related party transaction, make sure that it is at the fair market value and you are following the IAS 24 requirement to that. Then they are looking for the quality and speed of the current budgeting, planning, and forecasting process. Then they are asking you, do you have regularly forecasted and report on current trading performance and impact on the forward-looking financial information? Do you have peer benchmark KPIs in place? So have you benchmarked your performance with the, for example, other companies in the same sector in which you are operating? Okay, so you have to answer all these questions to show that you are prepared for IPO. Then it's not only the financial, there are a lot of other things that they want to see. So as far as your systems, IT systems and system infrastructure is concerned, so you have to answer these things, which you have to prepare with the help of IT and your PMO department if you have it. Okay, so you need to provide them if you have the integrated system infrastructure and risk management framework. So risk management framework is something which is a very comprehensive thing. It is impacting every function in the organization. It's not only like a responsibility of one department. For example, the risk management department. You may have risk management department, but then risk management function has to be applied in every function. And here the CFO role is very important because some companies they cannot afford, because it's very costly to have a separate risk management function. So initially they want to just work with their existing resources. So in that, because we have background from audit and from finance, so we understand risk. So we can really implement the risk management framework into the organization without actually increasing its cost, unless a formal risk management function is in place. So finance definitely can play a lot of role in that. Then they are asking about, do you have an ERP system across the organization? So usually when you have an ERP system, so you have a single truth of information for a single source of data for anything that you are asking. But when you are not having an ERP system, so you are using multiple systems and some information is available in one system and some information is available in another system. And there is a lot of times some reconciliation differences between that information. So of course, if you have an ERP system, so it is much better than not having an ERP system from the IPO preparedness perspective. But it's again not necessary that you must have it. You may have a lot of them not available, but you can still get approved. But again, the purpose of the market to provide this question is to give the prospective companies an idea that how they can prepare themselves for the IPO, because they are actually showing here that what they are going to check in their review of the application. Then policies and procedures is about the system development and maintenance. So policy and procedures, SOPs should be available not only for IT, for finance, but for every department, HR, PMO. Every function should have its policies and procedures in place. And they need to keep it updated. For example, when you have new products, you are expanding to the new geography. So, then you have to keep updating your policies and procedures so that they can reflect the existing circumstances. Do you have a business continuity plan and disaster recovery policies? So in that, like, you have to identify like who are your key operational resources, whether it's hardware resources, whether it's human resources. Okay, so you may have some key people in your organization, they and what are their skills? Do you have what is your skill gap and what is your requirement according to your business plan, and what are the gaps? So are you working to fill those gaps? So for all the key operational people, do you have their replacement available? For example, if someone becomes unavailable for some reason, he wants to leave the job, he got sick or he has some other problem. Okay, so do you have any replacement for him? So this is the like business continuity plan that you should have in place. Then you should have a disaster recovery policies in place. So in that, whatever software you are using, you have to evaluate those softwares and application, that which software is very important, which is medium important, and which is yani, less important. You can categorize them according to their need. So those software which are like revenue generating software, for example, in my case, we have a platform and we are selling a subscription to our customers. It's a point of sale platform. Okay, so if that point of sale platform becomes unavailable to the customer, which means it will directly impact on my revenue. So this is the most important software for me, and I need to have a disaster recovery plan for it. So if this becomes unavailable for me for some time, it will badly damage my reputation in front of my customers, and a lot of customers will leave. They will not be able to use my software, so they will not perform point of sales solution, which are like, for example, if you are in a retail shop, if your system is not working where you have to collect cash from the customer, okay, so what you are going to do? So it will directly impact the revenue of my customer, which will ultimately impact my revenue. So that software is the most important software for me. Then there will be some software which is medium importance, and some are less important. So you have to define your disaster recovery policies, hard and cold policies. So hard policies means you cannot live without them. So they have to be a replacement available, live replacement available. So if once your production, the software in the production becomes unavailable because of some problem in the production, then the entire system should immediately switch to the replacement. And in the cold strategy, you can have like replacement available in batches, or for example, data might be available not like up to date, but for example, until yesterday or until last week. So it is still doable, yani, because it's not very important software. So this is how you have to define your like disaster recovery policies. And you can definitely like work with IT guys, especially if your company is not very much matured, and maybe your IT, they need to have this type of expertise or help from you. Cybersecurity evaluation. So cybersecurity, it has like different type of cyber threats. So it's part of the risk management process. Again, this is the question also posted by these so the exchange there in their one of the 50 questions. So now every company and every individual in the world, they are exposed to cybersecurity threat. You might have listen a lot of emails where you have, for example, once some millions of dollars in the lottery. Okay, these are all spam, and they are actually cyber threats. They want to take your sensitive information or your sensitive information from your social media. So similarly, like companies are also exposed to the cyber security threat. So you have to have like governance risk compliance. They are called GRC. So you have to follow the personal data and protection law, like PDPL. The National Cyber Security Authority have issued different type of laws about cyber security. You have to comply with that. Okay, so apart from GRC, you have to see the vulnerability assessment of your website and platform. For example, in my case, where my platform is my bread earner. Okay, so you have to do the vulnerability assessment, penetration testing. These are all like technical things which has to be done by this IT security guys. So your company or IT department should be able to do that. Okay. Then there is a like function strategy. So they want to ask you that, do you have an investor relation function? So investor relation function can be an independent function, independent of finance, or it can report to the CFO. Both things are possible. Okay, so in the investor, but in either case, it has to work very closely with the CFO, because investor relation is the function or the officer who is actually handling the correspondence with the market. So when you are going to announce your financial results, so investor relation is providing that information to the market, replying to their queries. If there are any, mostly like once you are into public, so you have to conduct the earning call presentation. So earning call presentations is attended by a lot of potential investors and brokers in the market. So the market provide you a platform where you do your presentation, where you present your past performance, as well as what is your next year operational plan, what you are expecting as your revenue and profit. Okay, so these are called earning call presentations. So this is has to be managed by investor relation officer. And any questions from the venture capital, for example, about their performance matrices, about your ARR, churn rate, and all those information which usually in which the venture capitalists are interested. So it has to be answered by the investor relation officer. So again, if you have a dedicated internal independent internal audit function in place or not, uh, is your HR function supported by the documented strategy, policies and procedure? Do you have a separate treasury function with policies and procedures in place? Do you have ESG, sustainability, or CSR departments? Or are you operations supported by documented strategy? So you can see the in almost everywhere they are asking for your policies and procedure and documents, because once you are going for a public, so there is no question that you are just working without any policies and procedures. You must have to have it. The internal audit have to review that your operations are being done according to the policies and procedures which are approved by a competent authority like the board of directors. Then there are leadership and governance. Here you have to answer questions like, is your senior leadership have experience with the company for minimum of 2 years, or they are all of them are like new? For example, if you have most of your senior leadership for less than 2 years, which is actually a risky thing for from the market lens, okay? Because you may not be well versed with the company. Have you established the right compensation structure to retain and motivate your employees? If you don't have it, so of course you will have to face a very high turnover that will again reflect high operation risk in the company. Do you report quarterly to the board the financial performance or not? So one of the like key or compulsory requirements without which or your application will not be approved is that so if you have to first convert your company into a limited lab from limited liability company to the joint stock company, closed joint stock company, okay? And you have to hire a board of directors. Yeah, and you should have at least last 3 years accounts audited and with under full IFRS. So if you are a like a small and medium entity, from IFRS you have another framework which is called IFRS for SME. You can still follow it, but this is not acceptable if you are going for a IPO. For IPO, it is compulsory that you have full IFRS compliance. Okay, so these are like three compulsory requirements which everyone must have to comply with, which is like full IFRS compliance, and you should have like at least 3 years audited finances, and you should convert your company into a closed joint stock company from listed company, and also you have to appoint a board of directors. These are like four major requirements that everyone has to. This is our compulsory requirement. If you are not following one of these requirements, so you cannot apply for the listing. Do you have a company secretarial function in place? So do you have a board secretary or not? Then have you established the appropriate policies and procedures to govern the board of directors and subcommittees? So it is also very important that okay, you have the board of directors, but it's not clear that what is their role in the company. So you have to have a term sheet agreed with them, and it should be clearly mentioned that what is the authority of the board and how much authority they have delegated to the company management, for example, the CEO. So now after this like 50 questions, if you have answered, so you will have a good idea whether you are ready or not ready. And if there are gaps, so you have to work on those gaps to fill it. So this is now an overall like comprehensive journey for the listing. So once, for example, and decision is taken by the company initially, yani this is a starting point that a decision is taken by the management that they have to go for an IPO. So you have to create an internal team which should ideally have like representative from all the functions, from marketing, from sales, pre-sales, IT, because you have seen that there is a lot of things that have to be done by different departments. It's not only like finance as an individual department that they have to do everything. So HR, they have to do their things, policies, procedures in place, business continuity plan. IT have to make sure that cyber security compliance, GRC compliance, systems and infrastructure questions, and also about the business plans, sales and marketing and operations are involved. And of course, for the financial strategy, the finance department is involved. So you have to create a team, and most probably CFO is the one or his representative who should be as a coordinator and lead as a like project management team for the IPO project. Then it comes to the IPO readiness assessment. So we have already seen the questions that you have to answer, and during this process, whatever gaps you have identified, you need to create the structural or organizational changes, and then apply those recommended changes that you have to do to meet the requirements of the IPO. Then comes the third stage, which is the appointment of financial and legal advisor. So this is a compulsory requirement from the market. The financial advisor is someone who is licensed from the market to submit the IPO application. I cannot submit my own IPO application. I have to appoint a financial advisor. So financial advisor, he also perform independently the readiness assessment, and also he do evaluation of the company based on the company projections. So CFO has to work very closely with the financial advisor during all these things, okay, to share the financial projections and provide the basis that on what basis these projections are done. And if the CFO, as I discussed in the beginning, that have done his own valuation of the company, so it will be much easier to question if, for example, financial advisor is taking some assumptions which is not appropriate. Then the financial advisor is the one who prepare the application. So the when we comes to the fourth state, a CFO will be working with the financial advisor for the during the evaluation and the prospectus preparation. Then financial advisor is the one who has to file the application with the Saudi exchange and the capital market authority. This is his responsibility. So it is not the CFO who will do anything, but this is like a part of the process. So that's why it is here. Okay. Then comes the role of the market, the Saudi exchange, which is called the Dawal Group here in Saudi, and the capital market authority review. So both of them has to approve the application. So first the market has to give a conditional approval. The conditional approval, why it is conditional? Because it is conditional on the final approval of CMA. So first there is a conditional approval from Tadawul, then final approval is done by the CMA, and both can send back your application with a lot of questions that you need to answer. Then, of course, after your application is approved, then there are road shows that are conducted, and there are a lot of educational presentations done about the company past performance and its future plans, book building, and then the price is determined for the share, and then the proceeds are collected, and the securities are allocated among the subscriber. And then the market is announcing a date that once the share will be available for the trading. So a lot of you might have been involved into like subscribing for an IPO application. So you might have aware of that once you apply, so then shares are allocated and your remaining money is refunded to your account if there is a oversubscription. And then on the trading date, once the market announced, the shares are tradable in the market where you can sell your shares or you can buy more shares. And if the company wants, so it can arrange a like ceremony also, which is called listing ceremony, which can be arranged in the market. Now I will move to the common gaps, which when you are doing the readiness assessment, so usually like CFO, they find these are the common gaps. So in the financial gaps, for example, there are like inconsistencies in the IFRS application. I have seen it very common, even those companies who claim that they have fully complied with the IFRS, but there are a lot of inconsistencies. I have seen it myself in applying IFRS to share-based payments, IFRS 16 related to leases. Okay, the IFRS 15 about the revenue recognition, even the capitalization of intangible asset IAS 38. So these are very like common pain areas or where I have found a lot of inconsistencies commonly available. Then there are like weak forecasting discipline and limited financial visibility. So you will see a lot of forecasting, just you have your past data and then you increase it for with certain percentage, and there is no reason provided for that why I will, for example, increase my revenue by 10% or expenses by X% or revenue by Y%. So this has to be like a proper forecasting available with reasons that what the company is currently working, what product features it is working, if it has done the market research or a minimum viable product, has it tested with some customers, what was the customer response, and based on that response we are expecting this response from the market, and based on that this will be our revenue. So you have to have a proper forecasting of your financial numbers. Then there is a lot of over reliance. This is another gap, that over reliance on manual processes and spreadsheets, which are prone to error. You know that once you are not using ERP system, so there are a lot of manual processes for approvals, and there are different use of systems. So that is actually make the company unable to meet the accelerated reporting timelines as required by the market, and also insufficient documentation supporting key judgments and estimates. So you don't have any documentation in place, for example, about the useful life of your platform. This is one thing. Okay, also, you know, when you are preparing the financial statements, so in a lot of areas you have to use judgment. So you are using the judgment, but you don't have any basis for that. So when you are using IFRS 16, so you have to use proper discount rate, or what we call the incremental borrowing rate, to be used to calculate the right of use asset, and accordingly the depreciation of ROU asset. Okay, so they can take any percentage without providing any support. That why they are using this percentage. Then there are governance gaps. So sometimes boards are not constituted, committees are not formed, which is a compulsory requirement. A lot of time there is limited independence of the auditors, weak audit committee effectiveness. So auditor are not independent, or even if it is independent, so audit committee is weak, so they do not have the capability to perform effectively. Or there are inadequate policies, or related party transactions are there, but there is no basis provided, or they are not done on the arm's length basis. Then there are like a lot of centralized decision making. There is no proper mechanism in place where decisions can be challenged or discussed. So it's like one single-handed decisions are there. So whatever the owner has decided, it is implemented. Usually, it is not the case with the listed entities. They have to have a proper formal documented structure, organizational structure, where the decision should be taken by the senior leadership team. So in terms of controls and compliance, you have undocumented informal internal controls. There is a lack of risk management or compliance function, or immature function. Internal audit not established or lacking independence. ERP systems are not there, or limited preparedness for continuous disclosure and regulatory scrutiny. So after having looked at what are the like common gaps, the next thing that is very logical coming out of it is the CFO action plan to close those IPO gaps. So during your assessment, when you are answering those 50 questions, which will highlight to you that where are the gaps where you have to work upon. So it will actually ultimately give you a very good action plan that what you have to do to close those gaps. So usually like this will be around like this. So you have, if you don't have controls in place, okay, so you have to build control and compliance for, infrastructure. So you have to design the internal controls and establish internal independent internal audit and compliance function, implement the ERP system, and prepare continuous disclosure and post-system regulatory supervision. For the IPO execution and stakeholder engagement, you need to coordinate with the advisors, auditors, bank, and legal counsel, as act as a primary interface with regulators and investors. So you will be the leading or key person who will be coordinating with all of them. And financial and legal due diligence is one of the like compulsory requirement. You have to hire independent financial due diligence advisor and the legal advisor who will perform this legal due diligence and financial due diligence before the company can apply for the IPO. So the financial manager or CFO will be a key person who will be dealing with all these advisors and answering their questions. Then it has to CFO has to ensure that there is a consistency between the financial forecast and equity story. So actually, when you are going to the market, this is the story that will sell. It's not your numbers that will sell, or you have to create the story out of your numbers, that why your numbers were like that. And when you are saying that these are my forecasts about the future, so you have to make it based on your story, that why it will be like this. So that's why I was saying before that it cannot be like X percentage of this will be increased or Y percentage of this will be increased. You have to justify everything, whatever you are presenting as a story. So these are like some common action item for the CFO. Then it has to strengthen the financial readiness by completing the IFRS conversion. If it is still a IFRS for SME or no IFRS at all, then you have to convert the financial statement and create all the disclosures and requirements of full IFRS. Okay, so what are like common IFRS, which if you are following the not if you are not following the full IFRS, so that you have to apply. So common IFRS are IFRS 9. So when you are an SME and you are not following full IFRS, so you are most probably not doing the expected credited loss calculation as per IFRS 9, for example, or you are not defining your assets under amortized cost or at fair value through profit or loss or through other comprehensive income. Okay, so you have to apply the IFRS 9. You have to apply the IFRS 16 for all your leased contracts. So if you have a lot of offices, shops, or any property that you have taken only, so under IFRS for SME, you might be recording it as prepaid expense and then recording your expense throughout, even if your contract period is more than 1 year. But in IFRS 16, it is not allowed. You have to create something called ROU asset. You guys are very well aware of it. We have already done before IFRS webinar. So I am not going to go into that detail, but this is like another common difference which you usually find when you are converting from IFRS for SME to full IFRS. Then IFRS 2 is the share-based payment, IAS 38 for the capitalization of intangible asset, and IFRS 15 application. So you have to make sure that your 5-step approach is followed properly. You have to look at agent versus principal relationship. For example, if you have a kind of transaction where you are buying from a third party and then you are selling it, so are you acting as a principal or agent? So if you are a principal, then whatever is your cost when you are buying, it will appear as your cost of sales, and you will record your full revenue. But if your relationship is considered as like an agent, where you are not taking the risk or you are not the main decision maker on how to decide about the pricing, if it will be sold out, it is your responsibility. Otherwise, it is not your responsibility. Even for example, if the inventory become obsolete, so it's not your risk. So which means that if you are not carrying the risk, so you are an agent. So you just need to record the portion of your kind of commission as your full revenue. You will not record the full cost as your cost of sales and full revenue as your revenue, but you will just take whatever is your cut in the selling. For example, I got something in $80 and I sold it in $100 where I was the principal. So I will just record my revenue in with $20 with zero cost. But if I was the principal, so I will record my revenue with 100 and my cost as 80. So this is the like key differences in you have to look at it when you are converting into full IFRS. Then you have to, of course, establish robust budgeting and forecasting and cash flow discipline. If it is not done, maybe there was no requirement from your management, but when you are going for public, so there is no way that you can work without it, because this is all the time you are talking about. You are always presenting it to the investors, the prospective institutional investors, the brokers, banks, financial institutions who are interested. So when you are doing the earning call presentation, you are providing the forecast about the company. It's not only your past information, but also about your future forecast. Then you have to, of course, accelerate the month and quarter end closing process, because this is one of the primary requirement, compulsory requirement. If you will not do it, so you will face penalties and fines from the market. So you have to have this accelerated financial closing process. Enhance the governance and framework. So align the board and committees structure with the capital market authority regulations. Then formalize delegated authority and decision-making process, strengthen audit committee and implement policies for related party transactions. So this we have already discussed before, so I am not going to discuss it further, but this is the like usually the action plan which a CFO has to implement when it has to close the gaps which is it has identified during the IPO preparedness phase. So this is like mostly all from my side. I have provided you some important resources at the end of the presentation. So for example, the prospectus, what are the different sections of prospectus, what type of information is required. This is also available on the market website, which I have provided in the resources. So these are the different sections. You can see that you have to provide the ownership structure of the organization, what is going to be the dividend policy of the company, what will be the use of proceeds that you will generate from IPO, how you are going to use it. Are you going to use it to pay off the owners to take exit, or you are going to invest those proceeds into some projects which the company is currently considering to undertake or execute. Then what are the experts' statements, directors' declaration about the accuracy of information in the prospectus. Then about the underwriter information, how much you are going to pay to the underwriter. Okay, how you are going to share the issue the shares, and how you are going to allocate the subscription, and at what price. List the available documents for inspection, and expenses of the IPO. So you have to disclose that how much cost you are incurring on that, what you will pay to the, for example, underwriter, and what you will pay to the financial advisor. And if there are any regulatory waivers or you have any penalties by the regulator, so you have to disclose that. So this is like the basic information. I have also provided you a link where all the prospectus of the listed entities in the market are available. So you can go and look at all those prospectus which all the listed entities have issued when they were getting listed. So you can see, for example, if you are in different sector, in chemical sector, SME sector, or technology sector, you can go to the technology companies and look at their prospectus. So you will have a good idea about what is relevant information for you. Then this is another resource about the listing fees. This is all the official charges. I'm not going to discuss those charges. It's available in the market website. Usually, like it can cost from around 2 million Saudi Riyal to 15 million Saudi Riyal, depends on the company. You have to hire the financial advisor, the financial due diligence and legal due diligence advisor, and pay these all official fees. So it depends on your negotiation skills and how you select for example, which financial advisor you are selecting and how you are negotiating the price. So these are the resources I have provided you. This offering and listing advisor report is very good if you are like looking at it. So it is from the market. I will try to share it, for example, on the screen also with you. So you can see this is from the Saudi exchange offering and listing advisor report. I have provided you the link. Okay, it has provided you a lot of guideline how you will select the advisor, for example, main market IPO summary, and then it is giving you the expected timeline, what is expected if you are going for an IPO. Then there is a very useful information at the end. So you can see here there is a very comprehensive journey of listing, and it is providing you all the different phases of IPO, and what at every stage you can expect that you will be doing. Okay, so this is already like a very educational material available on the market website that you can look at it. Then it has also provided like all the financial advisor, for example, who had participated during the H1 offering. They have provided the legal advisor information. When you have to contact any financial advisor, you can go and take the from here. Here they are providing the company who was listed, who was the legal advisor, and who was the financial advisor. So you have a very good idea like which company was listed and who was the advisor. You can when I had to appoint a financial advisor, for example, how you will decide which financial advisor you will take. So you will decide with the management. So I decided about a criteria which I agreed with the management. It was an SME company in one of my previous employment. Okay, so and we had an investment round, and we needed financial advisor services for that. So we went for this list. Okay, and we see, for example, in our sector, like I am in a technology sector. So in technology sector, for example, I can go and I see who are the financial advisors who have done listing, and I can shortlist them. Or I can have a criteria. For example, I will just look for those advisor who have done minimum 2 IPOs. Okay, so this is like one of my criteria. So you can choose your criteria, and you can of course any contact the financial advisor. Then there is another very useful information You can see, for example, here in this chart, they are providing all main market IPOs from 2010 to 2025. And you can see here the company name is there, offer price is there, what was the offer price, what was the value, offer value percentage. So they have given this all. Okay, so when you are doing your self-assessment for your company, you can take, for example, from your relevant sector, who are the companies who are listed, and you can see what was their offer price, and at that time when they were listed, what was their financial statement showing, what was their revenue, what was their net profit. So you can calculate the earning multiple of all those companies. So it will give you a good range of the acceptability to the market. So for example, when I was going for Saudi Azam IPO, I already know that the acceptable range for the market to accept my share price is between 11 to 15 times of net profit. So based on my earning multiple, if I am proposing a share price that I want to list my shares at this price, so I will have a higher chance of acceptance of my application if I am putting a price which is between 11 to 15 times of my current profitability, because this is how I calculate it from the from the data which is available. So you can do that. Also, it's not necessary that this is somewhere written. It's not a hard and fast rule, but it is very clearly from the data that this is the acceptable range from the for the market. One time it had accepted a company which was 18 times of its profitability, and then after the company shares got listed, the price went down. So usually market, they don't like to they don't like to accept a very high price, and then the general public can lose their money. So that's why they are very pessimistic about it. Like, I would not say pessimistic, but they are very careful about it. Okay? So these are very good resources. Please take good use of it. Here you can find all the prospectuses of all the companies. Then you can find all the listing rules here I have provided you. And if you have any question, please, I am available to answer.
Thank you very much, Hamad. What an informative session we had, and very detailed explanation, and all the knowledgeable information we got. Uh, uh, we have so many questions, but before I ask the question, let me acknowledge one of our member, Mr. Amir. Actually, he suggested me this topic, and I would like to thank him. And now we are discussing this. So, if any of the member or anybody has any idea or any topic they want to discuss, or they think that they can come up on the branch platform, and they can give us the knowledge, please, you are welcome, and you can discuss this, and we will arrange it, inshallah. Let's come to the questions. The first question is from Muhammad Ziauddin. We have seen in many cases within 6 months of time, share price went down by 50% or more on Tadawul. So, how the regulator is protecting investor in this case? I think you just answer, but if you want to add anything, or we can go for the next question.
Yeah, sure. So, Muhammad Ziauddin, the thing is that no one can be sure about that share price will always go up. It's part of your life, that sometimes you make profit, sometimes you make loss. There are many other cases. One of them is the company which I did the IPO, Saudi Azam, and its shares have gone up by almost 8 times since the IPO happened. So it depends, like it can happen. I think your regulator cannot make sure that always the share price will always go high. Okay, so, and this is, I think, Wasim, you yourself are doing a lot of stock trading. I know that. So you might be sometimes making profit or sometimes incurring losses, right? You are more expert in
Yes.
that share trading. Yeah.
Yes, yes, you are right. You are right. This is part of the game, and the punters of stock exchange, they look at a lot of things, liquidity and prospects and market news. So a lot of things are coming. So you are right that this depends on the investor, that how carefully they have they have selected this share and put into to the implementation. Okay, the next question, can you explain controlled liquidity more? If you can
Yeah, I
add up.
think this is something which I referred to when I was discussing the NUMO or the parallel market. So as I mentioned before, that not everyone is allowed to trade in the parallel market. So there is always a like limited or controlled liquidity available. It's not like main market, because main market everyone can trade. Literally, there is no restriction on that. But for NUMO, as I defined, like there are certain criterias you have to meet. One of them, either you can prove that you have experience of stock trading with a significant amount during the last 12 months, or you have a recognized qualification like CME one, which is acceptable by the market, or you have like minimum 3 years experience of work experience in the financial sector. So that's why like not everyone, because is trading in NOMO, so that's why the liquidity is very controlled there.
Great. Next question is from Allah Baksh. Please explain MVP.
So MVP is a minimum viable product. So it's like when you are taking your product into production. So before that, you have a minimum version of your product, that what problem it is intent to solve. Then you go to some of your selected customers or potential customers. You take their feedback on that MVP. Then you get a plan that either you are going to do it on massive scale and incur your cost to generate your product, and then put it into production or not.
Okay, next question from Mehraz Tayyab. How long should a company stay private and how to decide when to go public?
Okay, that's a very good question. So there is no hard and fast rule, of course. It depends on the company own performance and also management which. It's not necessary that you go for an IPO. You can still live without an IPO. So if you are really having plans where you need capital, or you want to take a full or partial exit as a founder, okay, then you may decide to go for an IPO. Otherwise, you can live on your own capital, or maybe with you may be happy with the only venture capital, and you can decide to never go for an IPO. But of course, like IPO have its own benefits, because the cost of debt, like if you are going for to acquire loan from banks or financial institutions, so it's easy to get it. And even as a listed entity, you can float your own debt instruments into the market, like debentures, for example, or commercial papers, and you can yourself generate a lot of capital for your own use. As far as the how long should a company should stay private, so there is no hard and fast rule, but I would say minimum the starting point should be once you are profitable for startup companies, because market is very I would say conservative in that. If you are not a profit earning entity, so it is very difficult for the market to approve your application, because a lot of public money is involved. So market, it at no cost, it will allow like general public to lose their money. So they are there to protect the general public, or especially retail investors' money.
Hamad, correct me if I'm wrong. As you said that at least 3 years profit has to be there for a company. Suppose a company started in the first year, they made profit, and for continuous 3 years, they made profit. So at least these 3 years, they have to be remain as private, and then they can convert to the listed one. Am I right?
Yeah, so Vasim, I never mentioned that at least 3 years profit should be there. I mentioned 3 years audited accounts should be there.
Oh, yes.
But there
Okay.
is no, yeah, 3 years or profit requirement.
Okay.
Yeah.
Okay,
Yes.
that was actually next question from Mohammed Ziauddin. What is the minimum number of audited financial requirements for Namu and Tasi? And I think it's 3 years. Then next question is from Mohammed Ziauddin. This list is same for Tasi and Namu. Some list he's asking.
See, I have provided you a comparison, and I am afraid that I took it from the market website itself, but I am afraid even it is not up to date on the market website. Okay, so it's almost the same requirements. But yes, for example, as I mentioned in the due diligence part, so there is optional for the no more, but it's very compulsory for the main market. Also, there are how much shares you are going to list. So there are like different requirements from the main market and the Numo market. And also Numo or parallel market allows direct listing as well. So in direct listing, you can take 200 shareholder, for example, provide the list of those shareholders to the market that they are going to be our shareholders, and each person will have this much shares. Okay, so that is something you can still do in parallel market, but cannot do in the main market. So there are some differences in main and parallel market.
Okay, next question again from Mohammed Ziauddin. Application will go parallel to SE and CMA, or first SE and then CMA?
So application first go to the Saudi exchange, and they provide the conditional approval. Then it goes to CMA.
And these 50 questions are from Saudi exchange or CMA?
No,
Another
these
question.
questions are given at the Saudi exchange website. I have provided the resource for that also. You can go click on the link and you will find there.
Financial due diligence is not required for Namu market. Please confirm. Yes, I think he mentioned in the slide. Hamad, am I right?
Yeah, I think it was mentioned in the slide. Yeah.
Yes. I remember he said that it is not mandatory.
Hmm.
Then another question from Mohammed Ziauddin. Facilities management companies are
Sorry,
recording total rental collections as their revenue and share the owner of property at their cost. Do you think this treatment is okay as per IFRS 15? I think, Mohammed, this is related to IFRS topic, not for IPO. So I'm sorry, I'm skipping this question. You may ask me privately. Maybe I can. I have some expertise also in IFRS. The next is Muhammad Yusuf Ansari. Is there a chance that you can offer shares at premium in cashing goodwill? Yeah, this is a good question, Muhammad.
That you can offer share at premium in cashing. Yeah, of course. That when you are actually pricing your share, so it's not the sum total of your physical assets available on your balance sheet. So,
Okay.
so the difference between the company valuation, like if I look at my current company balance sheet, which is actually a loss-making company currently, okay, but I have certain assets and my equity even sometimes not positive, but I still have a very good valuation of share pricing. So that valuation is coming from where? It's coming from the intangible, which is actually a goodwill, and it is coming from many factors, including the ability of the management, the product, and its growth potential. So they are all contributing to the goodwill. Yes.
And similarly, we can offer on discount also, right? If the vice versa of what you said.
Yeah, so you remember that we had discussed the different stages of funding. Okay, so the earlier you are coming, the higher risk you are, higher risk you are taking. Okay, because always the highest risk taker are the ones who are actually at the beginning stage of the company. So that's why the prices are offered to them at very huge discount. So there is always a potential for them to make big money, because there is a rule of thumb in financial management: high
Mm.
risk, high return; low risk, low return. When you are
Great.
investing, or when already the company shares got public, so you are just taking the risk of the equal to the fair value of the share. So your return will be, of course, less. But when you are joining hands in the beginning as a venture capital, for example, so you can expect multiple times of your investment as your return.
Great. Okay, Hashim has raised hand. Hashim, please ask question if you have, or what you want to say.
no, I don't have any question actually. If I want to mention the Mr. Habibur Rahman question which you have asked, that financial due diligence is necessary for, is not required for Namu market. Please confirm. I believe what I understand from Mr. Hamad's comparison between the IPO and the NAMU listing, all the due diligence was required for the IPO, and for NAMU listing, only financial and legal is required, commercial is not required. Please correct me, Hamad, if I am wrong, because here
So
we have answered that it is not required.
okay. Yeah. So as I mentioned, so that comparison which I was presenting, this is not something which I took it, made it from my own. This is already available on market website, and I have provided that also in the list of resources. If you, so that table exactly is available on the market website. So market website table shows that all the due diligence is obligatory in the main market, and in the parallel market they mention it's optional. this is what is the document saying at the market website. Okay, but based on my own experience, okay, which I drive from IPO of Saudi Azam. So financial and legal due diligence was compulsory, but the commercial due diligence was not compulsory. It was optional. If you want to do it, you can do it. Okay, so that was based on my experience, but I cannot provide any reference to this experience. This is based on what we have seen in a practical transaction before. But the market document is saying something else. So that's why I was mentioning it a couple of times that it is probably not up to date.
This is actually some of the things mentioned by the regulator, and which is at least a minimum we have to do. But practically, when we go, we have to do a lot of things which are more than the prescribed things mentioned by the regulator. So definitely, due diligence is an important area, and everybody wants to see it. A lot of hidden information and a lot of data and risk, especially the risky areas, are highlighted by doing this. So that is the reason I think most of the people are going for this, even for going to the Namu market as well. Uh,
One more point, Wasim, here is that
yeah.
if you look at the purely the basic 100% compulsory requirements, so those were only four, which I mentioned somewhere, that you
Yes.
have to convert the company into joint stock company, you have to appoint a board of directors, and you have to have at least 3 years audited, and you should be full IFRS compliant. These are the compulsory requirements. Without that, you cannot apply. Okay, but even for all the rest of the requirements, if you are interested to go for an IPO, of course, you would like to maximize your chances of getting your application approved, right? So imagine if you are going to the to apply even for in a parallel market listing, okay, and you are saying that I have not performed the legal due diligence, I have not performed the financial due diligence. So what
Yes.
is the likelihood that your application is going to be accepted? Probably like you will incur the cost of the financial advisor and you will get a rejection from the market in that case. So
Absolutely.
that is also we
Ex-
should not ignore, you know.
True. True.
Exactly,
Yes.
I am 100% agree with you, Mr. Ahmad. This likelihood chance is very less if you have not gone through the financial and legal due diligence at least. So as we also have done this for Ramu, so I would suggest to Mr. Habibur Rahman that keep it as compulsory, at least the financial and legal due diligence.
Yes. Yes. Thank you very much, Hashim, for your input as well. Then another question from Hasibullah. Which precautions taken by a new PJSC when going to public? I think this is a very detailed question, and you have to see what Hamad has mentioned point by point. And I think all the things, if you follow, you can see that what precautions you have to make. You have to complete all the prescribed points, and then you can go apply for the for going to the IPO. Ahmad, please, if I'm saying anything wrong, just correct me, because we are almost out of time. So I'm quickly going through for the questions. But if I'm answering anything wrong, just please intervene. Then Habibur Rahman, another question. Please comment on the consent letter and comfort letter and why these are needed. Uh,
Okay. So for comfort letter, I know that it is one of the thing which usually required. For example, when it's required on a different type of corporate action. Okay. For example, one example, if the company is decided to go to buy its own stock from the market, treasury stock. Okay. So you need to apply for a regulatory approval for that. Okay, and one of the prerequisite for the regulatory approval is that you need to provide a comfort letter from the external auditor of your company. So that comfort letter will provide like kind of assurance to the regulator that company is meeting the requirement of the corporate law. It's a corporate law requirement actually. So if you look at Saudi companies law, so if you want to buy your own shares, so you have to fulfill certain requirements. For example, you should have a positive equity. You should have enough funds available in your balance sheet which are enough for your next 12 months of obligations. Okay, so who will provide this comfort to the market when I am applying to buy treasury stock? Market needs some comfort letter from the external auditor who can confirm that the company is complying with these company law requirements. Then market will consider to approve or reject the application. So this is like one case of the comfort letter.
Okay, great. Another question from Amir Bhatt. Is it possible to issue less than 30% of the capital in main market? If it is allowed, on which ground?
So in my opinion, no, it's not possible. They have mentioned that minimum 30% is required.
Okay. Khan Afzal, how can we have this presentation? We will share it with the ICMAP, and you can contact with them and they can share this presentation as well with you. Amir, but is CMA providing some guidelines to have more control over how and where an organization can utilize the proceeds from IPO, or they depend on the company's provide plan?
Yeah, so you have to provide a plan, like your at least 5-year business plan they are asking. Okay, so once you are providing a plan, you can definitely deviate from it, but you cannot do something like you provided in your plan that I have these projects to invest in. Okay, and then once the capital is created, you take this money and take home. It's not possible, right? You should either follow what you have provided to the public, this information in your prospectus as your future plan. Okay, or otherwise if you are deviating, so you should have a logic for that, that we are deviating because of the changes in the business environment. Now that plan is not viable and now this is our plan, which is like normal business operation for any business. Okay.
Okay, next question from Masfar Al Uthabi. Hi, brother. From your experience as a CFO, if a pre-seed startup is aiming for an IPO one day, what should be designed correctly from day one? What early financial or governance decisions typically prevent startups from ever reaching the public markets?
Okay, that's a very good question, and actually it has covered many aspects of the presentation. So, when a pre-seed startup is going for an aspiring for an IPO, so my suggestion is that they have to first make sure that they are stable and they have reached to a certain level of maturity before they are going for an IPO, which means that they have proper product which is very viable. Okay, and they have proper systems and structure in place. For the financial governance, we have already very thoroughly covered that you have to appoint the board of directors. You need to have proper policies and procedures in place. You have to define the delegation of authority, that who is responsible for what. Okay, and you have to have an independent auditor who should be reporting to the audit committee of the board. This is like a minimum governance structure which is expected at any company before they are going for the public market.
Okay. Another question from Amir Bhatt. Are there any specific guidelines and control from CMA how an organization or its financial advisor can calculate the market value and the share price, or it solely depends on the financial advisor calculation and decision of the organization itself?
So there is no guideline in this regard from the CMA. CMA is a regulator. They cannot they are not in a position to provide you guideline about how you can value your company. Uh, but they will of course look at your valuation critically before they approve your application. You have to depend it on your own calculation and the financial advisor calculation. So financial advisor is someone you have appointed. You can always question their calculations or their valuation, uh, and you can use your own knowledge and justify your own valuation.
Next question from Shahzad Rais. What are the minimum market capitalization and free float percentage of shares offered to the public for Tadawul and for Namuayat? I think this is also mentioned in your presentation, Hamad, right?
Yeah, mention, yes.
Okay, so you can go to the presentation and see. Uh, uh, I think 30%, if I remember correctly, but you can see in the presentation what Muhammad Yusuf Ansari rights are also an option for IPO.
Yeah, rights are an option, but first you have to list your shares for that.
Okay.
So rights will work only once your shares are listed, right?
Yes,
I mean,
true.
otherwise it can still work, but there will be no market available for that. So it will remain within certain interested investors.
Muhammad Salim, he's asking, can you refer me any client which planning to go to the Namu? Sorry, this I cannot take the question. The next one is Shahzad Rais. The companies can't issue the shares on discount in the first 2 years of listing. I think you just replied this, which I
You see, this is in the first 2 years of listing. I am not aware of any restriction like that. I
oh,
think you can, of course, it's on the company at what price they want to offer its shares.
okay. Muhammad Salim is again asking, please explain the term closed joint stock company.
Okay, so a closed joint stock company is somewhere between when you are fully listed company, which is called a joint stock company, and between once your status is a limited liability company. Okay, so the first step from a limited liability or LLC company to go for a fully listed company in the stock market is that you have to convert the company as a closed joint stock company, uh, create the board of directors, and then after you have fulfilled all the other requirements, then you can apply to the market for the listing.
Anil Ahmed is asking if company wants to invest in mutual funds, so approval required from CMA. This is, I think, not related to IPO. This is related to investment. Am I right, Amma?
Yeah, I think it's not something related to the IPO of shares. And again, I think it's not like you cannot have a generalized statement for all companies, because some companies, they have a different type of regulators. Like SAMA is one of the regulators, or there are some regulators in the health industry, some are in the industrial regulators. Okay, SIC, for example. Okay, so if you are a fintech company, for example, okay, you want to invest into mutual funds, most likely you will need an approval from the SAMA that this is what I am going to do. Before Without approval, you cannot do it. So it depends also what company are you.
Yes, and I think being ex investment banker, I don't see any restriction, but you have to disclose the risk and the amount of investment you have made in out of total, and you have to take the risk out of that. And they have defined companies rating, and according to that, you have to take out the risk, and ECL calculation has to be made. So
No,
this is what
but
I.
there are also other things, like, for example, if you are any other company, let's say I am a technology company. Okay, I will
Mm,
talk about technology sector. Okay, so my license, like commercial license, does not say that I am an investment company. Okay, but I have some excess liquidity, so it's not my basic operations. But I have some excess liquidity. I want to invest in mutual funds. So if I am a listed entity, regulator wants to protect the money of the general public. Okay. So if I am going for like mutual fund and I don't have expertise, so I am going, maybe I will incur some losses. So anything like this, it has to go through what is the size of the investment? Have you got the approval? Do you have the policy and procedure, that do you have the delegated authority that you can invest into it? Who has provided you this authority? Has shareholder approved? Because you are going to do some transaction or operation for which you do not have obtained the license. If I am the shareholder, I am investing into your company because I know you are a technology expert and you can create a lot of good technology products, but I cannot trust your ability to invest into the mutual fund, for example, right? So you require a shareholder resolution for that, board of director approval for that. So there are like a lot of governance structure that you have to pass through before you got this project in which you are investing.
Okay. Next question from Abdul Jabbar. If someone is not a member of ICMAP, then how to get the presentation? You can ask me, and I will share you the presentation. No problem.
Let
Uh,
me answer.
yes,
Let
yes,
me answer.
Hashim. Yes, please.
The way he got the link for this seminar, the same way he can got the presentation, as the presentation will be shared with the registered email IDs, so he can get the presentation from there also.
Okay. Okay. Great. Thank you. Next question. Do we have time? Because no, I think we are about to finish the questions. Is there any requirement to have Saudi employees as investor relation officer? And is there any qualification for investor relation officer? This is very particular question. Ahmad, is it covering in this presentation?
No, there is usually the Saudization requirement. We know that like there is a focus on Saudization, but at least I am not aware of any research requirement that the investor relation officer should be a Saudi. It could be anyone. Yes.
Great. Atif Shabir is asking, is there any check and control, any CM or any other authority that the company must comply with the funds utilization as it mentioned in the prospects or on which they raise the funds from public?
Sorry, can you repeat the question? It was
He's
quite
asking
long. I
that
don't.
is there any check or requirement from CMA or any authority that the fund we generated from the public we are using in the same manner as per prospect? Do they have any check or we can use it anywhere?
Yeah, so this is what I mentioned that once you are going for a public listing, so you have to implement all these mechanism governance structure. So you cannot just decide by your own, okay, you have posted something and then you can do something else. Okay, it has to pass through all these layers of governance. So auditors are there. So if you are taking any decision which is not aligned with what you have mentioned in your prospectus, so they will of course raise the question about it. So it has to
Great.
be disclosed, properly approved. It's anything that you are deviating under normal circumstances, like I mentioned, that maybe there are changes of circumstances, you have to do some deviation in your business plan. But this is always the case, yani, for any business entity. But it has to be justified. If you are, you cannot just do anything which is not mentioned at all, and it's totally a 360-degree different thing, and you think that there will be no like check on that, or nobody will ask you question about it.
This is the answer of your second question, Atif Shabir, as well. Next question is from Shahzad Rais again. What are the standard lockup period for pre-IPO shareholders on the main market and NAMU? And in what cases can exemption be granted?
Exemption from what?
The question is, what are the standard lockup period for pre-IPO shareholders on the main market and NAMU, and in what cases can exemptions or be granted?
Yeah, I am not aware of that. There was some lockup period. I myself had gone through it as a key management person of Saudiism. So I was not able to sell my share for during the lockup period. But right now, that I don't exactly remember how much that lockup period it is. Yeah.
Amir Bhatt is asking, any company going to IPO can offer employee share option plan, or it would need prior approval of CMA.
No, you can offer the employee share option plan without prior approval from CM.
Okay. This is Anil is asking something about IFRS. We are not having IFRS session. Inshallah, we will have this also in our pipeline. I think that's all about the main questions. Yes, Hashim, you want to say something?
Yes, I have a question. If a company who wants to go for NAMU listing or IPO, the first step they have done from they have converted themselves from the LLC to close joint stock company, but during the process of listing, either in NAMU or IPO, they failed to list themselves. So they should, can they continue as a closed joint stock company, or they have to convert themselves again into LLC?
No, if their application got rejected, they can continue as a closed joint stock and can always try again. So it's a legal status. So as you have your CR as a LLC company, once you convert it, so you have to apply to Ministry of Commerce and you get the closed joint stock company status. So this status will remain, and with the same status, if your application is not successful for the first time, you can always apply second or third time after removing the objections from the market or the regulator.
Okay, Atif Shabir has raised his hand. Atif, you can speak if you are still there.
Let me unmute him if he has raised the
Yes.
hand.
Yes, Atif, please speak.
Yes, Atif, please. Atif, unmute.
Hello.
Yes.
Assalamualaikum.
Salam.
Like,
Yes, Atif.
I'm sorry for this. Basically, my question has already been answered. So just forgot to lower my hand. Thank you very much.
It's okay. It's okay. It's okay.
Thank you.
Thank you very much. Thank you. I think now Muhammad Javed has raised the question. Can you, Hashim, can you open his mic? In fact,
Please raise your hand so we can unmute. What is the name?
No, I think he raised and then he cancelled. So
It's Amir Bhatt is there.
Amir Bhatt is asking, yes.
Amir, please unmute yourself and ask.
Hello, Assalamualaikum.
Walaikum
Walaikum
assalam.
assalam rahmatullah.
First of all, thanks a lot, Wasim Bhai, for ICMA team and Hamad Bhai to arrange such a fruitful session. Inshallah, we already got a lot of information, and this will be fruitful and helpful for the rest of our life and career. Thanks, I really appreciate it. So I have, actually I asked one question which Mr. Hamad already replied, but I have some query on that. Actually, I asked a question that is, whether a company can raise a capital less than 30% in main market or not. But Mr. Ahmad said that no, we cannot, raise less than 30%. But I have a real example. Last year, I think Fakhi Group raised 21.5% of the share capital, and they are still holding 21.5%. They did not still, increase more capital. So how it happened, I don't know. So I
So
think maybe CMA is approving any raise of capital less than 30%. This is what I believe.
So, Amir, most likely they might have been issuing the capital in different tranches. So they must have submitted to the CMA for their plan to get their total shareholding listed for more than 30%. Because this is what the regulator has mentioned. This is not this information is not coming from my side. I have taken it from the website of the Saudi exchange itself, and I have provided the link also, so you can go and check by yourself. So they might have done it in like different installments, you can say. So they got the approval based on their commitment that they are going to issue more than 30%. And as a first step, they might be issuing what you mentioned, 21%, and later on they might issue another 20%, for example. This is what I can understand from the
Actually,
case.
Mr. Math, still I think they did not raise further, capital. It's now I think nearly maybe more than 1 year, or
Mhm.
maybe 1.5 years. Still, they are holding 21.5% of their total shares in the market. So I think maybe CMA is allowing to raise less than 30%.
Maybe they might have got some exception to that, or otherwise CMA might have changed its rules and not updated on their website. So anything is possible here.
And
Fine.
sometime Amir, what happens that regulators give some guidelines and rules, But if something is really out of the box, and something is really good for the country, so they go out of the way approval. And
But is it in the
maybe.
main market or Numo market?
It's in the main market, Fahi Group.
Okay.
Fahi Care Group. And also, I asked another question, Mr. Ahmad, that whether to issue a employee share option plan. So whether we need approval from CMA or not. I believe in my previous organization, we had to take approval from CMA. We had to provide all the detail, how much shares will issue total to employees, or no, at how much price we'll have to offer to our employees. So this is what we have to provide all the information to CMA, and then they approved us as overall plan. So that's why I was asking this question, that this is mandatory to get CMA prior approval, or we can any organization which is going to IPO, they can offer shares to the employees.
No, so the answer to your question is that you don't need a prior approval from CMA. The reason is that when you are not listed, okay, you are usually implementing your ESOP plan when you are not listed. For example, in case of a startup company, they are offering its key leaders or employees who are joining them. Sometimes they are offering to all employees, sometimes they are offering to only key people. So who are joining them in taking this company, so they want them to stay there for a long time, and also they want to share the benefit widely, like not only the founders they will get the benefit, but also they want employees to take their share also from the success of the company. So that's why they are offering these shares to them. So at this stage you have no link with the CMA. CMA comes to the picture when you are applying for the listing, and of course at that time you have to provide all the ESOP related information, and CMA look at it, that who are the employees, what is your ESOP plan. You have to share all the details, and your application, if approved, so of course like it will be approved together with the ESOP plan. This happened also in case of the Saudi Azam, which was listed, and I have now currently also in my current company, my previous company, all those companies have ESOP plans, but they are not near listing until now. They are still at the seed funding or post seed funding stage. There is of course no question of getting CMA approval at this stage. The CMA will come into the picture once you will take your application for the IPO.
Okay, this is the last question we are taking because we are really crossed the time. Habibur Rahman, can you please unmute your mic and ask the question?
Assalamu alaikum.
Assalam. Yes, Habib.
Salam.
We have seen a practice that the capital is increased by converting the retained earnings to the capital. So, is there any limit to convert the retained earnings to the capital? Because sometimes there are bank covenants. So, except that, is there any requirement from CMA?
So usually the bank covenants are restricting uh, you to take the money out of the retained earning, so that you cannot distribute the profits among the owners while you still have the liability towards the bank. Okay. So, but I don't see that any covenant which will restrict the conversion of retained earning into the capital. Actually, by doing this, you are strengthening your balance sheet. You are reducing the risk of the lender. If you are saying that, okay, what was before my retained earning is now my permanent capital, because permanent capital is something you cannot withdraw. So you are actually helping the loan provider by doing this. So no loan provider usually put a covenant like that, but they are putting a covenant that you cannot distribute the profit out of it. As part of the IPO process, when you have to show the capital, and then you have to issue the shares for the public listing. Yes, if you have a lot of retained, because you can start your limited liability company with a capital of even 5,000. So you can have a company with 5,000 capital, 50,000 capital, or 500,000 capital. Okay. So in my case, for example, in Saudi Azam, when we were an LLC company, we had a capital of 500,000 and we converted 29.5 million from retained earning to the paid up capital to make the paid up capital 30 million to meet the requirements of the market at that time. So yes, you can always convert. And I don't see an application of covenant over here based on what I described.
Oh, thank you.
Okay, thank you very much, Hamad, for the valuable feedback. Luckily, we have Zia Mustafa with us, who is my great friend and brother and our council member as well. I would like to invite him to say something and put the closing remarks and conclude the seminar. Zia, over to you, please.
Thank you very much, Wasim. I think we have really enjoyed this whole session. Thank you to Amar for your suggestion. And as Wasim said to all members, if you guys have any other good topic, please bring to us. And we will arrange excellent speakers like Muhammad Hamadur Rahman, same way. And we all have enjoyed his session. Thank you, Misira. Thank you, Shafiq. Thank you, Amar, especially. You raised this topic, and we're really grateful to you. We all have learned because of you. And Wasim, you organized this managed session very well. Mr. Muhammad Hamadur Rahman, thank you very much. I have heard the whole session, and it was very practical, to the point, very specific. And Hamad, thank you very much. And in the future, looking at this topic, because the IPO is in very much demand for the last 5 to 7 years, maybe we'll ask again, Hamad, one more time, maybe a little more advanced stage, and then we may ask. Few people are doing IPOs within 6 to 9 months. Few people are doing it over 2 years. There are certain challenges and how to focus on those challenges to make an IPO as a successful IPO. Amal, thank you very much, and we really enjoyed your session.
Thank you very much. Thank you all of you.
Thank you very much, all of you. With that vote of thanks, we conclude this webinar. And inshallah, we will see you soon in the next interesting topic. Thank you very much. Assalamu alaikum wa rahmatullahi wa
Thank you.
barakatuh.